So this is a video that I wanted to give to you guys. I forgot to actually include it in the weekly commentary. It slipped my mind, but I want to give you guys this video. And it's actually maybe better to give it in one video itself because it will be very focused. And this is actually a trade that I was helping you guys navigate through on Thursday. It's not cherry picked. It's not me going back in real time. You can all fact check me on the Telegram group chat. A lot of you watching this would know the trade that I'm talking about. It was a bearish breaker block. Euro USD New York session off of the Philly Fed Manufacturing Index 830 news event, right? But I want to tell you guys and show you guys how I build the narrative for taking these trades, right? In the weekly commentary 34, not the one I just uploaded, the one before, right? So two weekly commentaries ago, number 34, we were here on the DXY, right? And I wanted to see the move higher into this fair value gap and then move lower. So the overall narrative for me was I want to see lower prices. Now, when I have that narrative, I'm waiting for price to enable my narrative. I'm waiting for my narrative to become at play. Now, every single candle in the weekly profile is not always going to be an up or down candle, right? You'll get a move up and then, you know, the rest of the week could move the other way. So we had this fair value gap, and I said this, and you can check it on the video, the weekly commentary 34. I said if Monday shows willingness to go higher, we want to see the move higher into this fair value gap and then the move lower. So Monday, this is Monday's candle, the 17th of October. We move up higher and we're inside that fair value gap. Tuesday, right, we're just consolidating. And you see Wednesday, that candle, that down candle, that's the displacement that I hunt. That's the displacement I hunt. Now that tells me on Thursday, what am I going to do? On the Thursday, I'm going to hunt the continuation for sells. What I'm going to wait for is a move up into above midnight's price, right? Take out some intraday buy side liquidity, and then with the catalyst of the 8:30 news event, I want to see shorts offered. Now, this is what it will look like. Now, on the 1 hour chart, right, this is how I had it, right? So this is Monday, Tuesday, Wednesday, Thursday, Friday. Now, I say high of the week and low of the week here. I know that the high of the week is here and the low of the week is here. Forget this exists because this did not exist whilst Thursday was playing out. We have the high of the week and the low of the week here. Essentially, what I'm doing is this. You see Wednesday, this entire move down, right? Remember, this was Wednesday's candle. I want to see the move higher to go short again. Now, this is what I want you guys to think. And this is a swing trade type setup. It's an OTE, right? And it's using the swing points throughout the week. You know how on OTE, London to New York, we use London to New York because it's likely that London places in the opposing end of the range of the day. So on a bullish day, London is likely to put in the low of the day. So we want to get OTE from the low of the day. It's you can use the same methodology for swing trading, right? So if you know that Tuesday is likely to have placed in the high of the week, right, and then we displace lower away from the high of the week, you can hunt this OTE, right? So from this high to this low, Thursday moves back into the range in this OTE, right? Bear this in mind. I'm going to remove this fib now, but remember that high to low retracement entered here, right? And this optimal trade entry, right? Now let's go on a 5 minute chart. So this box is the CBDR, right? We have, I always put three deviations. I just always put three deviations, right? Now, one, two, three. Now it overshot it, but in this area, I'm looking to hunt for sells because it's up three deviations. That's the protraction that I'm waiting for, right? And it lines up with what the OTE from Tuesday's high of the week to run this. Look at all these sell side liquidity pools here, right? Now, I knew that on the day New York session, what is there? There is that economic driver, that Philly Fed manufacturing index at 8:30. And I always look, price was here, price was around here. I have this box lined out and I have this box lined out all the time, right? If there's a news event, I'll put 8:30 news, right? Because I know this is when a swing point is going to be made, right? Because there's that news driver, there's a reason to swing price. Now look at it, right? We start the day off, and London is just a continuous consolidation, right? Look, it's consolidating the whole day. Now we're above the midnight opening price. This is what I want. Now, when I see this, what I'm anticipating is what? Accumulation, manipulation, and distribution. But let's look at it closer because a lot of people could have got tripped up here. Why do you think this high is gonna stay intact? Remember what is the narrative. What is that 8:30? This news event, right? Now, if there is no market structure shift intraday already, then I'm waiting for this high to get run out because we have a reason to. 8:30, we're gonna run that high before going lower. If this one already didn't do the market structure shift, if it already market structure shift, I'd want the news to offer the retracement to go short again, but there is nothing here, right? We're just consolidating. You see this from here to here, this is a consolidation. Now, the build up to the news event, look, is 8:10. At 8:30, there's that news event, which is there, right? 20 minutes, price runs up. Now, this is what I like to see. We run the high. We go higher and lower. Now, that is what I look for, right? This right here. Given the time of day, right? Given the context, this is what I'm looking for. That low, high, lower low, and that move. This, right, if I just get this out, that, if I just consider the wick, that is your bearish breaker block. You have a high, a low, a higher high, and the higher high runs, right, liquidity given the time of day in line with the news event, and then lower low. Look at that displacement. Look, one, two, three bodied candles down, and the breaker block. Now, the question I got was this: why not wait for that fair value gap? Why not wait for this? And this is the reason. You see the one and two up, look, one, two strong up close candles, one, two strong down close candles following it. I don't really care about seeing this fair value gap get filled. I'm not, if we look to the left, what's to the left of this fair value gap? Big bodied candle. This is a deeper level understanding of imbalances, right? You don't really need to see this area get run. This isn't my attention. This breaker block is the attention. This breaker block, right? When you see a breaker block, given what I just showed you guys, time of day, right, with a news event running a buy side liquidity pool in line with your bias, right, which is to go short, because we need that run on this high to get short. Remember, offset, distribution. I'm waiting to get short on the breaker, and this is what it will look like. And I showed you guys in the thingy. So I think it was 981. Yeah, or 981 was the entry, right? And my stop loss went just there, right? I think it was 12 pips, 12.2, right? And what I was aiming for was essentially, I wanted to see us go into this order block essentially. This is how I like to take profit. I will consider the fair value gap, right? I'll consider the fair value gap and the order block before thinking about taking the low. It's the way that I approach the low. You see, when I see this, right? When I see this, and the biggest factor is, let me just go back one. The biggest factor is the time of day. Look at this box. This is the New York kill zone, right? Here is 10 o'clock. If we haven't ran this low by 10 o'clock, I'm not waiting for it to get run. That is the end of the kill zone. This is when I'm expecting liquidity to be delivered. It's not trying to run the low, right? If it hasn't run the low in the build up for 10, then I'm not going to care about it. I'm just going to look to cut the trade, right? Now, whilst I was in the trade, you see this was very choppy on the 1 minute. This is 5 minutes, right? 5, 10, 15, 20, 25 minutes, right? It was choppy. I think it was 979, I believe. Yeah, 979. We cut the trade here. Now, why 979? It's because we have this fair value gap here to here, right? We have that fair value gap to cut the trade in, and we got the move down, right? When you look to take profit, remember these opposing PD arrays, because this is how you have to remember it. you're working down this range, right? You're looking at what is the obstacles, what are the hurdles in the way for this run on this low. We have that fair value gap, and there's this order block right here, right? That's going to provide a resistance to the run on this low here, and of course these lows, right? These lows here, this was actually the target I had on that day. And overall, it did get there, but it was a time of day which I just have no interest in. This is what I care about. And look at the time, 10 on the dot, and it doesn't run the sell side liquidity pool, it goes and run the highs again. This is why you have to be very specific with taking profits given the time of day. Now, you're going to look at this and say 1.64R, and some of you may, your mind may be cluttered by high risk to rewards and whatnot. Now, usually I'd like to see a 2 to 1 risk to reward, but 1.64 is by no means bad because the thing is this: the guy's waiting for, the high R's. You put your TP here, it was never getting there. You would have got stopped out at break even, and you would have tried held it for a 2.5 R trade. I've traded for a long time, and I've shown you guys real results, and it was created, right? All those payouts were off trades like this: 1.64 R trades, 2 R trades, 3 R trades. I don't really get more than 3 R. If I do, I'll take it. By all means, I'll take it, right? If the run to liquidity allows me and there's time of day and, let's say we displace early on and it's 9 o'clock and I'm displacing and I'm getting close to this low, I know we have loads of time till the end of the New York Kill Zone to run lower. Then I'll probably, extend my target, 4R maybe. But this is enough. Get a few of these a week. Let's say you get 2 of 1.6R trades a week. That's 3.2R, right? That's 3.2R. That's potentially 3.2%. Is this not easy? Isn't this easy? And the take profit was smashed, right? Here it's smashed. It's not even about tagging and fighting with the take profit. It was smashed. 3.2%, given that it was 1% risk on the trade. And you get those 2 times a week. You pass any funded, guys. And this is very repeatable, right? Watch this video. Look how I built the narrative. Look how I understood that we're gonna look for shorts that day. Now, when I was looking for shorts, chapter 3, lesson 1, what am I waiting for? The run above highs. I'm waiting for my buyers to sell to. All these people, right? This accumulation. And where can I expect to become a seller? The news event of the day, given that it's not NFP or FOMC. This is how you build a narrative and execute upon the narrative, right? The guys in the Telegram chat that I think you did ask me to make a video on this. This is the video. And this was me walking you through it. And in this was where we were all saying, oh, it's going sideways, right? It was going sideways here. It was consolidating, right? And sometimes that could be a bit tough to hold. But regardless, I say hold it. Do you know why? Because if you take a loss, it's managed. The worst thing that can happen, it's managed. Why is my stop loss here? Because it's in a balanced area, right? Say it did want to trade up and give an OTE, then my stop loss is already balanced. And my stop loss is safe inside of a rebalanced area, right? If it comes out and takes me out here, it's probably going to go and run higher up here. Regardless, my stop loss would have been hit if it was up here. So I can minimize my stop loss whilst it being safe. That's the thing with stop loss. You need your stop loss to be safe whilst minimizing it. That's what stop loss is, right? You're gonna first intention is this: put it in the safest place possible. Then the second thing you think about is it in the safest place possible whilst minimizing, the size of it. That's how you need to use the stop loss, right? So I just wanted to make this video for you guys. I think, videos like this is possibly very helpful to you lot, right? If you do like these type of videos more, we could try cover some. I'll only cover the trades that we actually take and that actually navigate you guys. I'm not a cherry picker. I'm only going to give you guys the trades that I actually navigate you through on the Telegram chat. Um, just wanted to give you guys this one. So if you do like it, message me. We can do more of these. By no means, this takes a few minutes of my time. Maybe a 15-minute video. This, I don't know how long it's been running for, but don't want to ramble on. So, yep, till next time. See you guys next time.